Good afternoon. It's Friday, the 26th of January, 2007. This is Brian Shannon speaking from Alpha Trends. Today we had a pretty choppy day, and the market closed with slight losses. The S&P 500 spiders closed down 6 cents today as they tested that rising 50-day moving average and were able to recover somewhat intraday from what was looking like a lot worse sell-off. We had been watching the 142 level, and what I said yesterday was getting below there and staying below there for more than an hour or so might have me concerned. The market was kind of bouncing back and forth above and below that level all day, and we do still have a declining 5-day moving average. So I think it continues to going into next week. The best course of action is to continue to be cautious in this environment. We do have this failed breakout on the daily time frame, and a lot of times we get pretty good reversals from failed breakouts in the S&Ps in particular. So this failed breakout, even though we have that rising 50-day moving average, which I always refer to as innocent till proven guilty, I think that we have to keep our caution level a little bit higher because of the failed breakout. We were correct in capturing that move higher, and now I think the prudent course of action is to continue to be extra cautious in here until we have a little bit more clarity about what this market really wants to do here. It could possibly just be wanting to consolidate a little bit more with the support down near that 140.5 level. And if that's the case, then we could stay in this range for several weeks. It's too early to tell. We do still have a lot of earnings reports to get through next week, so just continue to take it very cautiously. The Nasdaq 100 made a lower high this week, and if we look at the weekly time frame, you can see here we have actually a lower high and lower low. But I think the important level in here is actually found down near the 43 level. That's the more important level of potential support right now. I was kind of surprised we didn't see a test of that level actually today. I thought that really getting below that 43.50 level was going to lead to a test of 43, but it continues to hold on a closing basis above that 43.50, kind of poked down through there intraday. Very low volatility today. The Qs were kind of just trading back and forth above and below the daily VWAP and closed right on it. So really not much happening in the Nasdaq 100 today, but it is starting to look a lot more ominous in here because we do have that lower high, and we did make a slightly lower low, but closed above that level, that 43.50 level. So I still think the 43 level is likely to get tested here in the relative near term, meaning the next 1 to 2 weeks. It's not that far away, so you know, the Nasdaq itself, the Nasdaq 100 closed at 43.16 end of last year, so we're only up 41 cents. And the spiders, those closed at 141.62 last year, so these are only up 53 cents or so for the year. So you know, we've had some pretty good volatility in here, but really kind of trendless when you consider the overall movement that the markets have seen. The mid-caps have been, as I've been pointing out, the strongest group out there. It continues to hold kind of above that midpoint. Actually, this is the midpoint of the recent range. The recent range, again, being 145 to 150. And you know, that 148 seems to be a pretty important level of support that keeps getting tested intraday and then holding. So this group does look better, you know, just objectively looking at this half-hour time frame. It's easy to see here that we've got a nice pattern of these 2 higher highs and these 3 higher lows. So this area in here, the 148.5 or so, getting below there, it would do damage to this uptrend. And now what we're going to have to see is, can the market take out this high and go on and make another higher high? For now, though, you know, the market is range bound here on the daily time frame, so there's no advantage to getting aggressive either on the long or short side. Semiconductors were a little bit stronger today than the rest of the market for once. They were up 0.8%, whereas like I said, the Nasdaq and the S&P were down. The semiconductors were able to bounce off this rising 5-day moving average, and now it appears that this 33.70 level will be an important level going forward as far as some support goes. So I still don't think that it makes any sense at all to buy these semiconductors. This daily chart doesn't look good at all. I think it's setting up for a possible further decline. So we're going to just have to take it one stock at a time, and hopefully we can keep finding stocks like NutriSystems from yesterday. Yesterday we got involved in NutriSystems at $62.80. I had suggested covering half your position at $61.50 yesterday, and then pre-market I put out that it ought to be covered right here at $58.25. So if you didn't cover, maybe you got part of this extra gain right in here where the gains nearly got doubled. But if you did get stopped out, according to the way I said to play it, you would have made $1.30 on that first half position, and then $4.55 on the second half. So that one worked out well. The other stocks that we were looking at were COSI, which we were looking for to buy on strength above 605. That didn't materialize, so there was no trade taken in that stock. EDA, we were also looking for strength above $10.90. That strength never materialized, no play in there today. QGEN, we were looking for a move above $16.15, but that doesn't mean buy it at $16.50. So this one gapped up too high. There was no reason to take any position in there. Boom, what we were looking for in here was first a rally up to $27.50, and then for it to drop below $27.20. Today's low was $27.22, so that seems to be the right place where we would have wanted to get short, but obviously it never triggered, so no trade should have been taking place there. The only open position that we have now is Nasdaq as a short position. This high right here was 27 cents. I had suggested a stop of 33 cents. And I'm going backwards here, but I suggested selling the stock short below $34 a share with a stop at $34.33. I think that that's a good place to continue to keep that stop, and this is our only open position right now.